interesting mix because you're choosing, well, let's say, for example, where you find favor, because it's bottom up, you said, right? That there are opportunities in the leaders of the last bull market, and there are then some themes that you're saying which were not quite there in the last bull market, right? So let me try and pick and choose. Consumption, let's say. Budget plus maybe the 8th pay commission, all of that. Is it the discretionary part that you like? Is it the non-discretionary part or staples that you like more?
Both.
You like both?
Both, because India as a consumption market still is at a nascent stage. We are crossing $2,500 of per capita income. We are yet to see a inflection point coming in consumption. And look at the fiscal policy and the monetary policy stance now. Fiscal policy, the budget, actually gave a lot of boost to consumption. Next year, we'll see the impact of that.
Right.
There is a 8th pay commission, which is expected from January 2026, where you see a revision in pay scales of government employees, and then that impact will come. RBI has changed the stance in monetary policy. Now we saw interest rate cut, we saw liquidity measures being taken. Yes, there are some issues of external volatility because of on currency and so on, which is probably still holding them back a little bit. But I think as an economy, we are now seeing fiscal policy and monetary policy and the changes more favorable towards consumption. And this basket typically has a lot of companies which have strong moats. They have good businesses, good cash flows, good returns. Even if you do some dividend discounting model of many of them, you will find them at an attractive valuation today and with a very long runway for growth. So consumption is definitely an attractive area for a long-term investor.
In discretionary though, what? I mean, a lot of people are betting on, let's say, for example, consumer durables in a meaningful way as opposed to autos. I'm trying to understand what within discretionary.
So, see, each segment within consumption will have its cycles.
Okay.
Some will be more rural driven, some will be more urban driven, some will be, say, more early players in a discretionary pickup, and some will be late pickup in a discretionary. There is one or two segments, say for example, real estate and building materials, which are connected with each other, where there are some good branded companies available at good valuations now. So those can be attractive pockets to look at. Auto, we would still segment it between two-wheelers, four-wheelers, CVs and everything, but selectively we are bullish on somewhere around electric vehicles or utility vehicles, SUVs, we are bullish on those areas. Again, depending on which valuation also that they are going with. If you look at the entire basket of, say, consumer services like QSRs, again, positive developments coming there, food delivery, those have now come to attractive levels to really start fishing for ideas here. So, I mean, I can keep going on. You should stop me, I think.
No, we love listening to you, don't worry.
Yeah, you've always been bullish on consumption. So, what I'd really want to understand is you have definitely got a growth problem of sorts, at least visibly, within the consumption basket. And does that concern you at all? Should that concern an investor? Because multiples are elevated and growth hasn't really kicked in a strong fashion. Of course, Trent, etc. are outliers, but in the space as a whole, barely clocking a double-digit growth rate.
So if I'm looking at the short term, say less than 1 year, then even I would look to time my entry into a particular sub-segment of consumption at a certain company, at a certain valuation all the time. But when I'm looking at long term, say 5 years or 10 years of opportunity within the consumption space, at least I get a huge set of universe of companies with good businesses and good management to choose from. Now, the thing about valuation is, you get the best valuation when people doubt the previous two.
Exactly.
Correct.
Right? When they doubt the business growth, when they doubt the management, you get best valuations.
Correct.
So that is where contrarian investing or picking up companies on a contrarian view becomes better.
Fair
So
point.
I think over the space from daily groceries till real estate, there are opportunities. Now, within this, sub-segments may have a cycle to choose from. Some companies will be available cheaper today, even though the business is going through a small trough. And I think if next year, there are these 2-3 visible triggers for consumption. As I said, the budget's tax spending, interest rates coming down, and pay commissions. I think with the visible triggers, I think there's enough to pick up today.
And what about financials? Seems to be